what do you normally do when you have to make a decision? You go and speak to people. How does it work for you?
This is my kind of standard piece of advice, which is easy to say and very hard to do. However, everybody can do it to go from a point of not knowing to a point of knowing a little bit more. So let's say we have a table and furniture is the company that or the space that somebody is interested in. I know we're talking about finance for a second, but finance is sometimes a little bit more complicated to understand. If you just take furniture as an example, it's easier. So say, okay, now within furniture, what are the few business models that exist? I can make the wood, I can make the tapestry, I can put the whole thing together, I can have an online portal that I can sell it on, I can have a physical store I can sell it through, I can do the cleaning of the furniture. So there's 10, 15, 20 different types of business models when it comes to a single piece of furniture that somebody can get into, from all the way from procurement of the wood to the front end selling and the servicing of a piece of furniture. So that's the first thing somebody should understand when they're entering into any kind of area of interest, is what are the business models that exist.
Hi guys, welcome to another episode of Finance Forward, where we speak about finance, accounts and everything that counts. Today we have Akshay Mansukhani of Malabar Investments with us. Akshay is a Wharton graduate. He's also gone to UPenn. He is also belonging to the family which had co-founded Onida. He is a CFA, a CIA, and he's a very dear friend. He's been helping us with a lot of advice since a few years. So Akshay, thank you so much for finally making it through. I know your schedule is super busy. I think this was tough, but I'm sure this is going to be a very enjoyable conversation.
Thank you, Anant. Thank you, Pratham, for coming here. And I spend a lot of time with young people, undergrad and college admissions. And I just love to kind of help and give advice, because I believe what you give ultimately is what you get. And so, more than happy to chat about my experiences.
So I was I wanted some dirt on you. So I spoke to your wife. And so one of the things which she mentioned was something what students go through across different industries and different stages of life. You went to considered probably one of the best schools in the country. You went to UPenn again. I mean, you joined, you were in the league of Elon Musk, the Warren Buffets, the Sundar Pichais of the world. In the same school, you were sitting in those hallowed classrooms with them. You also went to Wharton after that, which is again, it's considered to be the best business school in the world now. And that your wife mentioned that you were still confused about what to do. I mean, for everyone who's thinking about Ivy League education as the pinnacle, it's still confused, or people are still confused about what they want to do in life for the next 20, 30 years. So how did you deal with that?
A great question. So when I give advice, this is the one piece that I mentioned, is that if three of us are sitting, and let's assume three of us do three different things.
Yeah.
And we're sitting as, 100-year-old men having a glass of limbu pani and having a chat about life. And one must look at happiness, and one must look at kind of what you've done in your life, how hard you worked, how smart you worked, how you leverage your relationships. There's so many things that could be spoken about, but single-handedly what you decide to do trumps every other decision. And so you have examples of Mr. Nair from the Leela Group, who started their business in his late 60s and went on to become one of the most successful individuals. And point being, if you take 30 years to answer this question, that is time well spent as to what you want to do. So for me, it was in some way a little bit luck and a little bit opportunity. And, kind of when you recognize that opportunity, sometimes when you take advantage of it, you could call it you got lucky. The Wharton School is one of the 4 undergrad schools at the University of Pennsylvania, and is one of the 16 master's programs, advanced studies programs, also at the University of Pennsylvania. And I was very lucky to have applied as an undergrad to have gotten to Wharton. And it's a pretty funny story, to be honest with you. It was if somebody asked me what is the most disappointing day of your life, is the day Wharton called me and rejected me from the dual degree between Wharton and the college, because I thought that everybody goes for a liberal arts education. It's very important to have an arts education of the arts. At the same time, coming from a Sindhi Amil family where education is very important and finance was kind of ground into us, I had to apply to Wharton. So it was a joint degree. And they called me and they said, listen, we're not accepting you for the joint degree. However, for Wharton, we're giving you an acceptance. And I was so upset because I had the school swimming captain, state level tennis, almost, on great grades, etc. That I told them that I'm not happy with this decision of yours, and I put the phone down. And I applied to a few schools, landed up getting into a few Ivy Leagues in a matter of 20, 30 days. So I literally worked night and day, went to school, and after the new year had started, and went and asked every kid in my commerce class in Cathedral, did you apply to Wharton early decision? 23 out of 45 kids had applied, and I was the only one to get the call back saying that you've gotten to Wharton. So I went home saying, Dad and Mom, I made a huge mistake. They thought that I was going to another school, and I was so upset that they made me a Joseph Wharton Scholar. So I got a letter saying you've been made a Joseph Wharton Scholar before even starting. And I said, what is this Joseph Wharton Scholar? You could do MBA classes as an undergrad. Okay. And so there's a journey as to kind of how I landed up in the MBA program as well. But it all started with this thing that I wanted to do college. And they told me if you had applied with Spanish or French as another language, you applied with Hindi. And coming from Bombay, Hindi is like kind of your native language. That's why we didn't give you that joint degree. So what I wanted to do, it's a little bit of a longer story, but to make it into a couple of sentences, I knew I wanted to do something entrepreneurial. As a child, I always told my father, Dad, if we have if I also start a business, we'll have two businesses, so to speak. And he had made some investments and had not made the correct investments. So he called me up saying, you've spent a decade abroad. I worked at UBS investment bank for a few years. Come home and fix the investing problem I'm having. And so I landed up coming home, meeting with a lot of fund managers, met Sumit at 4 million in assets, and offered some capital at the end of a lot of checking on what Sumit is doing. He turned around and said, hey, would you consider coming on board? And that's how I landed up becoming a partner at Malabar, doing investments as well as on the business development side. And today, we've been in business 15 plus years. Our assets are north of $1 billion, so call it 8,500 crores in assets at the moment. And 1 rupee has become 11.5 rupees net of management fee and carry over that period of time. So we're really happy with our track record, and we are the largest investors in our own funds. So there's a lot more behind that. I can go into it, but in a nutshell, that's kind of how it me wanting to start something and the opportunity presenting itself and me taking hold of it landed up in us getting to where we are at Malabar.
Yeah. So let's just take it from that front, right? First and foremost, there is utter confusion on when I talk about the student community, when they talk about things like investment banking, venture capital, private equity, family offices. You mentioned a little bit about the fees and carry. No, while people understand it, if you can explain it from a practical sense, remember our audience are mostly people who are either extremely enthusiastic about taking up a career in finance, or they might already know it. So if you can just...
So simplistically, think about the world of finance as the sell side and the buy side. On the sell side, it's more of an agent where you're not taking, you're basically providing the services of maybe potentially connecting people. So say, for example, an IPO. An investment bank reaches out to the company that's wanting to do the IPO. Say it's a pharmaceutical company. They reach out to the investors and they effectively create that demand for what they're selling, which is shares in this company that are looking to go public. And then they make a fee of that. That investment banking fees could be on the equity side, could be on the debt side, and that effectively is one of the largest pools of capital for any investment bank in the world, which is capital market fees, either equity or debt. And then the other source of fees is M&A, right? Mergers and acquisitions, and that's the other large source where if companies are being bought or sold, M&A fees are effectively collected. So this is in large part basically what an investment bank does, and also in some way they guarantee the smooth flowing of the capital markets, because the regulator also mandates that the banker should be able to stand and take full responsibility of a transaction actually happening. And hence the bankers will do it at a point in time where they know there's demand for the supply that they're getting to the market. So that's one side of it, which is the agency side, which is investment banking. And it is profitable. And it's evolved where over a period of time, Indian promoters have started to respect bankers more versus a few years ago, we heard of many stories where, even the promoter sometimes didn't want to pay the banking fees after having agreed to what the fees are. So that's kind of on the investment banking side. And investment banking, the beauty is that it's a phenomenal training ground for individuals wanting to learn the world of finance because you're doing kind of the gamut of things. And the bigger banks are broken up into silos with regards to the sectors, right? So we have a consumer sector, an industrial sector, power sector, financials, where they basically spend time with those companies in those sectors addressing their banking needs. And this investment banking is more for companies than for retail, which everybody will know kind of what the retail bank does. Then on the buy side, it's broken up on the early stage companies, which would be seed to kind of the venture capital, where they are venture capital is basically investors investing in ventures where it's just a venture, so to speak, where it's not been tried and tested, so to speak. And then the next step is growth capital, companies that are looking to grow and their business model is being tested. And then private equity incorporates all of this because it's private and it's equity, it's not public markets. But private equity, the larger global funds would come in at companies that are a little bit more advanced stages. Pre-IPO is the next stage. And then the one popular global phenomenon on the private equity side is leverage buyouts, where you're buying out companies, which happens less in India because the promoters want to continue to own these businesses and not give up financial control, but it does happen in a few instances. And so that is the gamut of capital, where a big part of that is the public markets. The mutual funds being a large part, your AMCs basically advise these mutual funds. EIFs are a large part of that as well. And then global funds that have domestic India FII license are also a big part of, I think, almost 3.7, 3.8 trillion in market capitalization today. 22 trillion is global, or 22%, sorry, is global capital. So you could say almost $800, $900 billion of our markets is in some way kind of global capital that's been there, but that's on the public market side. So individuals wanting to get into finance should speak to as many people as possible within the world of finance to understand each of these silos, how they work, go to sleep thinking about this is what my job might be, to appreciate that a sell side and a buy side can be completely different. And for me, I went to sleep many nights thinking about the transition from being a banker for 5 years to working on the buy side. And even within the buy side, you can have positions on for a few days versus for us, we invest on average for 6 years. So, it's a different mentality if you're a long-term investor versus a short-term investor. So even within the world of buy side, you've broken up into numerous types of investors. And that's a separate conversation.
Yeah. Before you just go ahead, so one just quick thing. So just to summarize what you said, right? First of all, buy side and sell side. Under sell side, it is primarily investment bankers who really take charge. On the buy side, you have investment bankers. You also have VCs if it's an early stage company, and PEs if it's a slightly more mature company. Is that the right summary of what you just said?
Yes. If you open up a textbook, finance textbook, private equity would encapsulate seed, venture capital, growth equity, pre-IPO, and then even private equity funds in India buy public companies, stakes in public companies. So the entire gamut is covered under private equity. But it depends on kind of what stage you're in. Yeah.
Because a lot of people are not really clear, at least when they start. Please go ahead.
So one of the things you said was that you speak to people. And there was also something you did when you wanted to make the decision when you came back to India that should you do Malabar or not, or what should you do? You went and spoke to people around you and you got information loaded and the decision was yours. But that was one of the best things a kid should be doing, especially early age, right? Because by yourself right now, with the amount of information which you have, you don't know what to do or how do you make a decision also. So what do you normally do when you have to make a decision? You go and speak to people. How does it work for you?
Great question. So this is my kind of standard piece of advice, which is easy to say and very hard to do. However, everybody can do it to go from a point of not knowing to a point of knowing a little bit more. So let's say we have a table and furniture is the company that or the space that somebody is interested in. I know we're talking about finance for a second, but finance is sometimes a little bit more complicated to understand. If you just take furniture as an example, it's easier. So say, okay, now within furniture, what are the few business models that exist? I can make the wood, I can make the tapestry, I can put the whole thing together, I can have an online portal that I can sell it on, I can have a physical store, I can sell it through, I can do the cleaning of the furniture. So there's 10, 15, 20 different types of business models when it comes to a single piece of furniture that somebody can get into, from all the way from procurement of the wood to the front end selling and the servicing of a piece of furniture. So that's the first thing somebody should understand when they're entering into any kind of area of interest, is what are the business models that exist within that specific thing that, hey, this is a piece of furniture. That's number one. Second is the types of people that run these companies. You can have a Jalaram Wood guy to, you can have, I forget the most famous online portal for furniture, which was Pepperfry, thank you, which is there. So who are the kings and queens of this space, this furniture space, who made it? Who are the, you could say, 20 most successful people on the furniture side? Then look at it from an investor's perspective. Money has to flow. In most places, money flows. There's only a few examples of companies in the world that are bootstrapped, and it's a big credit if people are bootstrapped. So if money is flowing in from an external source, who are the 20 investors who have proven themselves in the consumer space, and then specifically within consumer have invested on the furniture side, right? Who are those people who have made those investments, and which are the 20 biggest investments that have been made on the furniture front? Then there are hundreds and thousands of books about furniture. Which are the top 20 books as it comes to the furniture business model, so to speak? Not a magazine that provides beautiful furniture, but something about actually, and obviously furniture is a bad example, but if you were to say technology and SaaS companies, for example, which are the top 20 books on SaaS companies? Go and read that, right? So 20 business models, 20 people, 20 books, so to speak, right? And 20 investments. So if you want to understand any space, these are the 4 areas that you can spend some time on. And after a year where you've done all this, you can say, hey, listen, I understand a little bit more about a piece of furniture.
So I have a 2-piece question I want to combine. One is, so we know you studied CFA, you studied CAIA, which is, we've seen it sort of upcoming in India as a certification qualification. And you spoke about IB, VC, PE. Can you combine the two and tell us, how is it that if somebody wants to enter into this field from education and experience, what pedigree should they sort of aspire towards, work towards, so that they can probably start walking in your footsteps?
So it's a very difficult question to answer, because if you look at the top 100 most successful people in the world and you look at their academic qualifications, you'll find a lot of examples of people who left college, right? A Mark Zuckerberg left at some point, a Michael Dell left at some point, and they just said, look, we can't spend more time on the education front. So for us lesser mortals who want to finish our education, maybe this advice is for them, right? So the path of education to a final job or an industry, there's no clear-cut path, because many times opportunities present, right? So for example, in America, you'll find some of the most successful businessmen in America are lawyers. And it's just a legal profession is something that a lot of people feel very comfortable with taking, because the law is very important, and having a good sense of the law gives you that training that can be used in anything. So this is the reason why finance is so important and so loved, because from finance, you can do many, many things and do operations. But sometimes from operations to then do finance becomes a challenge. So I would say, don't look at it as a clear path that if I do X amount of training, I have to get and do this X job. Look at it as, this is my level of preparation, my mind in terms of, and that's why many of the business schools, finance is just one of the elements. So for me, if I had to just deconstruct finance for a second, so first is the language of finance is accounts, That's the way I see it. So for me, there was no choice. I had to do accounts as an undergrad. Otherwise, I would not understand how to speak finance, right? So that's why accounts seemed like a very simple, basic thing to get done. Then within finance, there is operations management, there's marketing, there's again further accounting, valuation. So there's a host of metrics then within finance that get covered. Although I would say a well-rounded education today is having a knowledge of the world and figuring out where, finance fits within it. If an advanced, and it all depends on what kind of role you're looking to do and what kind of training is needed to do that role. So for example, if it's a role that is more basic and say you're working as the CFO or the head of a particular branch in a department within a bank, right? So there'll be a level of training that's needed versus say if you wanted to go to the RBI and at the RBI you had to basically get say a master's in economics, there's an additional level of training that's required. So having some understanding of what role you want to do then also allows you to appreciate kind of how much training you need when it comes to education, but there's no clear-cut thing. And nowadays there are education institutes where they pretty much guarantee you a job as you enter because they're already dealing with many of the companies as it comes to vocational training. And that is something that I would highly recommend because there is such a huge demand front end from companies. If certain institutes are actually training for that front end demand, those are actually good places to be because in some way you're addressing the issue of finding a job right at the start of a vocational course. So I don't know if I fully answered the question, but just wanted to share.
Yeah, absolutely. Because the problem is that when you say you need to know what role you're in, and in turn, then you need to figure out how much training is required. It's just that people are ground zero. They don't know what role they want to get into, and that's why I actually combined it with your education. So you've done CI. I'll just frame the question in a different way. CFA is something we do at Zell extensively. CAIA is more like, we think of it as a subset of CFA because it's a specialization into alternative investments. Can you tell us your sort of connection, what you went through in your academics, you at least at a personal level, and when you see it from a practical macro standpoint?
Thank you. So the CFA, for somebody who had done Wharton undergrad, accounts, finance management, there was a fair amount of repetition. However, if I hadn't gone to Wharton, I would say there's a lot of investment management learnings that one gets from the CFA, and I highly recommend the CFA. The CAIA, to me, was more alternative investments, and the world of alternative investments is large and growing. It's a smaller universe in India, but growing pretty fast. And to appreciate globally all the types of commodity funds, hedge funds, interest rate funds, venture capital funds, private equity, public markets, there's 15, 17 different types of investment vehicles. And the CAIA effectively captures that. So both of these can be used effectively as you're going into the world of finance. However, I know it's yet a difficult question for children or students going through as to where am I finally going to land up. One solution or one suggestion is you can just go on Google and type in industry sectors, and you will get a JICS or a certain industry list of industry sectors, 100 sectors, where you can then say, hey, I don't like furniture, I don't like travel, I don't like hospitality, I don't like this. And basically through a process of filtering down, saying that, I would like to be in the education business, or I would like to be in the fund management business. But it's a reverse process, which sometimes I find also helpful because you're forced to deal with some 100 sectors, subsectors. Are you interested or not interested? Then boil it down to 2 or 3, and then within that start running an exercise as to what would be interesting companies to work for. Because one thing that I think most young people would want to do right now is to work for a company that's growing. And there are many companies like that have been well funded or have industrial houses that have backed them that are growing at a certain pace. So then within these couple of subsectors that you've identified, which are the companies that are growing, and then figuring out what they do and then running that exercise there. And you go to sleep one night thinking that I'm working at an education company, go to sleep one night thinking that I'm working at a fund house, and see what naturally comes to you. And speaking to people is critical, because speaking to people, they will say, hey, listen, we don't think, and speak to people with all ages of seniority, because then you will get answers like, hey, I don't think you have the skill set for this, or you might really enjoy it, or if you do this, you'll be better suited at your job. So by speaking, I would say I spoke to, I did 80 fund manager interviews, but I must have spoken to another 100 people within the community, senior people from SEBI, anybody and everything that my family could introduce me to and my friends. I went and said, look, this is what I want to do. And a lot of people told me, hey, it will be very difficult for you to raise the capital. However, if you raise the capital, there's so much growth in India that you will be able to generate the returns. So it was true. It took a few years to raise the capital, but then there's enough growth where earnings on our portfolio are doing 23 to 25%, which means then that's what helps us generate, the growth for our investors. So overall, my advice would be a reverse, is to figure out what you don't want to help you down to kind of what you might want.
So one other question I want to dive into is Onida. Your dad started Onida in the 1970s, in 80s, sorry. So when he started Onida, at that point in time, Onida was literally, I think we had Onida TV at some point in time, big consumer brand name. Why didn't you jump into that business almost the chance you got?
So I never even had the discussion with my father to join Onida because of two reasons. I think one is wanting to start something by myself. And as a young boy, it was clear to me I wanted to start something, but I didn't know what. And then the other thing is, you have to also look at the competitive dynamics, or just in industry, when your same analysis, right, this business model, so to speak. So 2012, I think we hit 2,000 crore top line and 100 crores of PAT.
This is Onida.
This is Onida.
Oh.
And the competition in the space has been relatively fierce. The global companies can send product, the Samsungs and the LGs, at a certain scale, which gives them a cost advantage. And this is an area where cost is very important. Right? Then there's after-sales service, which has its own issues. Then you need to manage a distribution system across the country, which is itself a challenge. One of the things we did was we started manufacturing ourselves, which was a huge advantage. And that's the reason the company is alive today. And we've got massive orders from others to manufacture for them, because our manufacturing capability is very strong. All in all, brand is well appreciated, well-run business. However, competition is fierce. And so in that kind of gamut, to want to do something where already I was helping my family because we wanted to have a savings. Old school Sindhi, Amil Sindhi mentality is save as much as you can. And my best financial advice I ever got was from my mother. She said, Akshay, whatever you make, save half of it and then double it, right? So that was what was grained into my mind from my mother. And my father gave me the opportunity where he said, hey, listen, I want to, invest some capital. So that's how the journey on the investment side went. And Onida, today, I think we recently did almost 800 crores of OEM manufacturing for other groups. And the business can do well. But to me, honestly speaking, it was an independent decision to start, and do something myself. However, I know it's not so easy for certain others that have family businesses and the like, where they need to go in. Overall, I would say to my own family, thank you for giving me the flexibility. And to other families, please give the flexibility to your children, because they might be better at something else than what you decided to start with your family many years ago.
Yeah. So I have a bunch of questions over here. One thing which I want to ask you, again, you can choose not to answer this, is do you think you could be here without the Onida backing?
Great question. So I am extremely appreciative to my father for having invested, and today it may feel like a small amount of capital, but very relevant to get us going at the start. And so he would not have had his savings had he not started the business. I put all my life savings into this business, and plus my father helped me out.
Yeah.
So said very crudely, in this business of investment management where you're running a fund, you need money to run a fund. So without that, it just becomes impossible, right, to get going. So even if it's a smaller number, and we started literally with a few $1 million, literally a few crores is where we started. And we were one of the first AIF category 3s in the country, and that it has a 20 crore minimum. Any AIF has a 20 crore minimum. So that's what we needed to get to. So
AIF is Alternate Investment Fund.
yes, alternative investment fund, then broken up into startup, debt, and then category 3, which is public market funds. So maybe I could have started with a little bit less money with just my own savings and gone out and tried to raise the capital from basically friends and family. Maybe that could have happened, but it happened with the family backing. So we're very appreciative of that.
So, I mean, awesome to understand that your family is supporting you and more. How were early days in New York for you?
So New York was wonderful because I was probably one of the highest paid investment bankers for my age.
Can you tell us how much did you make at 23? 24, I think.
So at 26 years old, I made $465,000 was my all-in compensation with my bonus. In New York City, half of that goes to taxes. But anyway, that's what I
But
made.
back then also 3 crores, 4 crores. Abroad,
Yeah, this was 2007, and I started off. I became an MBA, and so as an MBA, you start in as associate, not an analyst, and then you get promoted to director. And there's a comp level that you have, and our capital markets, our ECM desks were making north of $1 billion in fees, more than that, a few billion actually. Global UBS ECM, and we spent a lot of time actually generating a ton of income. So we knew what we were generating for the bank ourselves and what we were getting paid. So yeah, having graduated at 22 and then just 4 years in, that was my total comp, and it really was an absolute high. But ultimately, I had to be on a zero salary for many years here at Malabar. We had very meager, kind of a humble start. And then, we just try to keep our costs as low as possible to try and break even. And we will break even, in short order, which then at least give us a lot more room to grow as a firm. But yeah, the first few years of Malabar were pretty tough because it's not a household name. It's people's hard-earned money, it's their savings. So, why should they trust it with you? So overall, it was a tough journey and definitely a huge change from being able to afford $100, $200 dinner in New York to I started September. I started here October 2010 and October 2009 and 2017 is when my main painting in my house went up. Is because I needed that many years to have some savings to then have the courage to tell my wife we can now buy a painting. So 2017 is when my main painting in my house came up.
So now, I mean, a very simple question for all the startup guys over there. I mean, you invest in later stage startup, but you met Sumit, you knew his pedigree. When you had to think about saying, yes, I want to do business with him, what you advise to a guy who's coming and saying, should I do business with maybe his friend, his peer, whatever? What are the top 3-4 attributes? Very simply put, you'll say, look at this and enjoy it.
Yeah, and you've seen successful co-founders in your investments as well.
You guys are asking some of the best questions. I spent an hour yesterday on this topic with somebody looking to launch a fund he's coming out of one of the most blue chip endowments and very, very respected person and the like. And these were the things I said yesterday, to him. So the first thing is in our world, the biggest reason why funds fail is the partners have a fight. And you won't think of it immediately as the reason. You would think returns or people didn't invest with you and the like. So being able to disagree without being disagreeable with your partners and being able to have differing points of view, but having the EQ or the courage or the knowledge or the confidence to say that you can overcome a disagreement. You can overcome a disagreement and you won't ruin the relationship along the way, but you will make it stronger. Right? So I think to me, that is the first and foremost thing when it comes to a partnership you should be able to have a healthy disagreement. The next piece between partners is the complementary skill sets. People have their own strengths, they have their own weaknesses. Playing to knowing what your strengths are is very important. Then playing to those strengths is equally important. And if two people come with very similar profiles, then it becomes a challenge. So for us at Malabar, we have team members from north, south, east, west, different backgrounds, different languages that we speak, and we all come together for a common purpose, which is trying to generate the best returns we can for our investors. That's our fiduciary duty. However, the skill sets are of a different range. So that's the second piece of advice I would say is, is the other skill sets complementary? Third is, do we have what it takes to win? And you guys started from nothing. We started from nothing. And today you're the, maybe the third largest in the country when it comes to online, education. And that identifying the opportunity, what you decide to do, right? And being able to actually execute on it with the people, with your resources, with the skill sets, and execute, right? It's having that level of confidence and being able to execute in an addressable market is very important, and spend as much time figuring that out, because that's in effect going to make a big difference. Because if things are growing and doing well, you can grow with that market, and can execute on it. And part of that is the team, right? Do you have the right team members to address, and it's growing, over a period of time. So I would say these are the few things. And then the last thing I would say is having the flexibility to be open-minded to a change along the way, and not be too hard in your thinking on what the business should do for the next many years. IBM is a consulting company today. Right? I wouldn't have dreamt that IBM would be a consulting company. And so being even on the iPhone, right? If you see and you read about the books and kind of how they killed the iPod and they launched the iPhone, right? So even within a company, having the ability to mobilize in a different trajectory, I think is very critical. And you can only do that when you have a level of humility to accept new information, and that new information is beating your current situation. Anyway, I can keep going, but these will be few of the things I would look for or would suggest as individuals are starting off.
You were mentioning about your journey when you how you started Malabar. Let's say that somebody eventually wants to work in a family office, but they don't have the funds to start by themselves. So let's say I'm 21, he's 21. We've done with our education. We studied maybe a CFA, maybe an MBA. I have a couple of years of experience in some basic finance or accounting exposure I have. If I want to start working at Malabar, what exactly do you look for? What do I need to do? What do we need to do to sort of work our way up to starting to work in a family office like Malabar?
Thank you. So just to answer, I apologize, I didn't answer the earlier question, is parts of the financial world. One of them is the family offices. And family offices is, you could think of it as ultra and high net worths who have a level of corpus that justifies having team members or employees to kind of work there and help with the investments, right? So that would be a family office. Malabar, by definition, would be a long biased, we do pretty much very little shorting, but long biased institutional fund, right? Where while the family is the largest investor on the domestic side in India, the team members are the largest investors, globally. However, we do take external capital, and hence we're a fund, versus a family office typically would either be a SFO, a single family office, or an MFO, a multi-family office. A multi-family office may be a few families that come together to share pool the capital or share resources at that level. So now this is a very long answer. I'm going to try and be very short on this, what we look for, right? So one is having the relevant skill set for the job, right? So say we're looking to hire somebody on the investment team.
Sorry, Akshay, I want to break this. I want to break this question, because I know that the practices of hiring at Malabar are very, very stringent also. You guys spend a lot of time. So yeah. In the words of your wife, the least asshole-friendly company in the investment world. You can let that out. But yeah, it is that. So I want to talk. So with Pratham's question, that how can you work in the finance world? How can you get to work in investment banking at CFA? And how can you and how do you get to work at Malabar? You can answer.
Thank you. So our recruiting process is one where we look for somebody with the right skill set, right? So if somebody is coming into the investment role here at Malabar, does the person have either banking or certain investment experience in the past? Then the fit is another large question, right? So how would you define your ideal colleague? What is the point of criticism or constructive feedback that you've received over a period of time? So the fit also is very relevant. Third is the fire on the belly and hunger, where it's through few interactions it becomes clear how hungry individuals are, and then you got to test these things over a period of time in different environments across different team members. So we have 4 rounds of interviews, 2 people from the team on each round, and then the last round is the whole team. And so we do an aptitude test, which is 12 minutes, 50 questions to just understand where somebody's aptitude is. We do a math test, just given how important math is to our investment world, and that's a 20-minute, 20-question test. I think it's 15 minutes. Then we do a pattern recognition test as an investment analyst. Being able to recognize a pattern is very important to an investment thesis. Then we do a short form case study. Look at this piece of furniture. This is the furniture company. Can you give us a 1-pager? Then we do a long form case study. And then we do a psychometric test. A psychometric test, you'll be surprised, with just a 60-second test on one side, basically what you think of yourself, 50 different adjectives, and then turn it around, what do others think of you? The software is able to give you a very accurate insight as to how you are as a team player, how motivated you are, and it's shockingly true. When I did it for myself, it was shockingly true, and this is something that one of our initial investors has been doing for 5 decades, the psychometric test. So these are all of the interactions, and then we're not forced to hire somebody at the end of the process. So for our last analyst, I forgot about the screening call. So of the 250 screening calls, which is just a quick 5-minute call, because you get the best resumes in India sometimes and they can't even speak English. So I did 210 out of 250 calls myself. Then first round, we did, I think, 65, 70 first rounds, and we ran it twice. So I'm giving you the aggregate numbers. We ran it over 6 months, couldn't find, ran it again after 6 months, then we found the person. So I'm giving you the aggregate numbers across both processes. And then second round, third round, and fourth round, we did 7 fourth rounds. And that's a 8 to 10 hour interview, starts in the morning, ends in the evening. And you literally wear the candidate down with questions over a period of time to see how they do in that, 4 p.m. They've been at it since 8 a.m. or 9 a.m. in the morning. So that's our process, but it's a small team. It's a lot of time spent, but we're just a small team and we're not planning to grow the team. Obviously, if it's a firm that has, it's a larger team, etc., you won't want to spend that much time. But at least for us, these are all the things that we're looking at, and this is our process. And then there's a lot more along the way, because this is just the entry. People have just started, right? So then once you start, how do we evaluate ourselves as partners and what we do? There's a tremendous amount of work we do on that front as well.
This part, okay, it still take us a long time. We'll definitely change a few processes at Zell regarding hiring. However, the main question is, have you ever fired someone 1 week after someone goes through this process?
No. So thank God, so this is one of the questions in our long list of 200 questions we ask is, if you come to Malabar and you leave after a few months, can you guess as to what the reasons would be? But generally speaking, if people have spent it and made it through the process, the fit component is something that there's generally a level of fit, unless they do something, outlandish. And then over a period of time, if they're open-minded to taking feedback and the like.
So I read on your website that you mentioned you're over $1 billion AUM fund, but the number of team members are just 14?
Yeah.
Yeah, so I'm assuming that's the reason. So you mentioned how you look at hiring, but if I am wanting to work my way towards this, what is it in my control that I can prepare for to sort of go through this screening process and hopefully get hired? What can I do?
Anything in the best big investment,
of course.
Investment banks, like educational pedigree, the CFAs would help. I mean, anything, whatever comes to mind.
I would say 2 things. Number one is an area of interest within finance that is of specific interest to you or to me, and researching that area, speaking to people on that point, etc. So then that interest builds up. And second is connecting with people, because ultimately if you're connecting with people in the industry at different points and seniority levels, you might land up getting an offer. So So to me, those would be the two areas that I would not
Control.
yeah, what's in our control, and the two areas I would say go for it. And sometimes you know that you don't like something only after you've done a little bit digging on that. So don't feel shy to do digging on something or then sit back and saying, hey, I don't know something. Just give it a shot.
Got it.
One of the questions I want to ask you is that you primarily handle business development is your main forte at Malabar. You're also a Wharton MBA. You made 4 crores when you were 26. Now you run almost $1 billion plus fund. But you also called the CEO of a particular industry based out of Pune, and you were going to meet him, and you actually ended up speaking to a plant manager instead of him. Is that true?
This is one of the funniest stories of my time at Malabar, and not my funny story, my team member's funny story, because I didn't look so smart when this happened. And the page PA is Papati, GE is Genomal. That's my wife's great grandmother. So it's a business that we know through extended family, and very kind enough. They've answered questions, and we have a good relationship with them. And the page IPO was happening, and Ashok uncle, who's the founder here, is basically somebody that I really respect, and I've had a few drinks with him and wanted to ask him some questions. Actually, I apologize. The Lovable lingerie, which was the competitive brand, was launching an IPO, and we had been approached, and I wanted to call him and ask what he thought about Lovable, right? And we were going to the Cummins plant, and the plant manager also had a similar name with A, and also I was helping set that thing up. And so basically I called up Ashok uncle. He didn't pick up his phone. And then we were, on the way, we were 10 minutes away, and the phone rang, and I swore I thought it was Ashok uncle. And I said, Ashok uncle, I'm sorry to bother you, but we just wanted to ask you about this, brand. They're going for public, and, women's, clothing and the like. And so we went on for 7 minutes, and not much information was coming from Ashok uncle. And I kept wondering, why is this the case? And he must be uncomfortable talking about his competition. So I said, okay, let it be. He's not comfortable talking about competition. Just let it be, right? And so anyway, so then the car goes into the Cummins plant. And that same gentleman who I was on the phone with comes down. And he says, guys, I was trying to give you directions, right, to the plant. And here you are, you already knew. And then we were all looking at him. And I swear, Sumit and Ashish, my two partners, looked at me, right? Anyway, and then he was on the plant floor in a cubicle, and I sat in the middle, and there's no place, right, in front and behind. And as we sat down, the chai came, we asked the first question, the phone rang, and it was Ashok uncle. And Sumit looked at me and said, take that phone, right? So I had to excuse myself and go take the phone. So anyway, that was one of the funniest Malabar moments.
So how did you get to? I mean, you got one of the most famous folks on board as an investor with you, the Oppenheimer family. Can you talk a little bit about that?
So life is such that sometimes a chance connection can change your life completely. And my father, going to Japan to get the best technology for televisions back in the day, met a gentleman on the flight who said, hey, I like you, you're having a chat. Why are you going to Japan? And he said, I'm going to JVC because they have the best technology. I want to get it to India. And he said, who are you meeting at JVC? He said, this is the person's name. He said, that person is 2 levels junior to me. I'm also working at JVC. You come and talk to me. And long story short, we had a 30-year JVC relationship where we got R&D, and the quality of the product is what the company landed up, selling and doing well. For me, in the finance world, starting with Malabar, just a very small start with a few million in assets. One, again, luck, as would have it, I play squash. My buddy, Matt Pitsy, bumped into me on the streets of New York. He was 1 year senior to me at Wharton. We used to play squash, and he said, Akshay, let's play squash. My club, the University Club, is this beautiful club in New York City. come and let's play. And started playing, realized, and he said, would you like to become a member? And I said, one of the few things I truly appreciate about what my family has given me in my own assets is my club memberships. Because the amount of time we spend at certain clubs, and I literally write it down as my, if I had to write down what my assets are, the first thing I write is my club memberships. So for me, it was a natural thing where I said, Matt, please, I want to become a member. Help me out. And so multiple letters from members. You have to wait for certain months because people died actually. And then that created that space for the membership. And so then you can become a member. And the rules of joining the club were you don't ask people what they did work-wise, because in the letters, they don't talk about, oh, Akshay runs some great business. Akshay's personality, sense of humor, is he a gentleman? Can you socialize with him? You do not discuss work in a letter of recommendation, right? So that's kind of the how it's done, so to speak. So so it's the deepest squash program in Manhattan. Online you go, they can set you up with people at a certain level. And so I played with Mr. Oppenheimer, Carl Oppenheimer, once, twice, third time. And I didn't ask him what he does. And he finally asked me, Akshay, what do you do? And I said, well, value investing in India. He said, well, we do value investing in America. Microcap.
Just for context, who's Carl Oppenheimer and the family?
Sure. So there are many Oppenheimers. And, firm have the Phil and Carl have been great investors with us from the start, and Carl Oppenheimer is on our board. Phil and Carl, Phil in mid-80s started the partnerships of Oppenheimer and Close, doing micro-cap value investing in America. And they've done exceptionally well at the SEC registered, and they're the largest investors in their own funds. And they don't spend too much time marketing. So it's kind of a private fund, so to speak, but pretty well respected. And so today, Phil is 83, Carl is 52. And I bump into Carl, start chatting about work. And he says, you got to meet my father. So I go up the university club in a suit and tie. And literally before I could sit down, he says, Akshay, have you heard of this one auto components company? And I said, yes, I'm godfather to only one, child in the whole world. It's the chairman's grandson. And he said, complete luck. And he said, well, would you invest? And we said, well, we've looked at it. There's some, debt on the books. It's a great business. And, this is the dynamic, the family dynamic in the phone. And then he realized that the family dynamic is something which is very important to Indian businesses.
Yeah.
And he said, well, how do we, sitting here in New York, understand the family dynamic? We've taken a year to open our licenses to invest in India. So I said, well, you can ask us. That's why we're here in India. And he said, well, to ask you means I have to invest in your fund. I said, so what's the problem? He said, well, okay, that means we need to get to know you guys better. So why don't we play poker? So I said, excuse me, poker? So he said, yes, me and my fund manager buddies, we get together on a Monday night in Carl's house, and they're once a month, and you and Sumit are invited to play poker with us. So I call up Sumit. I said, Sumit, it's a weird request, but you need to fly to New York, and we need to play poker, right? And he said, what? I said, yes, you need to play poker. Trust me, you're making the right decision. So he came over, and we did well on the poker table that day. And so Sumit came first, and I think I came third out of maybe 7 or 8 players. And the next day they called us up, and they said, listen, we want to wire some money to you. And I said, well, we really are fine right now. Just first of all, the amount of money you guys are talking about is a little bit smaller than we were initially thought about. Second is, we don't want the money right now. Why don't you get on a plane and come to India and see what we're doing? And meet the family and meet the team members. And so they did 4 trips over the course of 2011, alternate months and the like. And then my first year wedding anniversary, December 29th, 2011, about to go for dinner. This deal was almost done. We were 19 million in assets. They were investing $10 million with us.
50%.
Exactly. So literally on 19 million, 10%, $10 million is what they were investing. And an email came from Carl Oppenheimer saying, Akshay, I'm sorry, but the deal is off. And I looked at my wife and I said, 7 o'clock dinner. She's Indian, but from America. I said, just hold on, let's do dinner at 8 o'clock. I need an hour. And so I wrote an email back to Carl saying, I said this, you said this, I said this. Just tell me along the way what mistake I made in this negotiation on basically what it is. They own a small percentage of our GP. That was what it was. And the email came the next day saying, please ignore my earlier email. The transaction is off. So sometimes, like we were doing on this podcast, just summarizing our thoughts is a good way to end.
I want to just take a quick detour to actually the future of investing. So ESG, right? It's upcoming. You are deeply invested in ESG. Right from explaining environmental, social, and governance, what exactly is it? And we were discussing before that we know a lot of people who are wanting to sort of upskill themselves in ESG, and that's what we are trying to do at Zell. But from your perspective, because you look at companies at a macro environment, you look at ESG, please explain to us what's happening, what is this, and hopefully a little bit about the future of it.
Sure. So ESG incorporates a lot of different elements, and to break it down and just focus on just a few important pieces of each. So on the G, the governance, right, to us as a typically like minority shareholder, right, in a company, the governance is very important in terms of how a company is run, capital allocation decisions, independence of the board, how decisions are made. There's a host of facets that cover governance. And the opposite is bad corporate governance, right? So unfortunately in India, in the 70s, our corporate tax rates were north of 90%.
Yeah.
So there wasn't that much of an incentive to show profits. Yeah. And so you have yet till today certain companies taking money out of the businesses. And if cash is coming out, it's effectively weak corporate governance. But there are many other parts of corporate governance as well where you could have related party transactions and the like. So for us, having clean corporate governance is fairly important, and there's no science behind it. So what we do, for example, is speak to juniors in the accounts and finance department. When quarter end results come, do you share numbers with the CFO, or does the CFO share numbers with you? So the more transparent numbers are within the juniors in a finance accounts department, it means it's a clean run organization because it's close to impossible to hide something. Second is the level of tax, the extent of tax that people or companies pay. Yeah. That's an indicator. Third is the type of business you're in. You know, if you have certain type businesses where you have government dealings and the like, the risk or the chance of other areas of understanding corporate governance is suppliers, right? You're making a payment to a supplier during a stressed environment. How did you make that payment? So there's a long way.
Summarize governance, corporate governance as the best practices to serve all your stakeholders.
Yes, best practices to serve all your stakeholders in an ethical manner, with, or said differently, with highest level of integrity. So whatever decision you make should be published on the front page of the newspaper, tomorrow. So that's generally on the governance side. The technical piece of the governance is you can have a company where you don't hire properly at certain levels. So that's not cheating or fraud. Fraud is an extreme form of governance. Yeah. But you haven't built a company that is built for the future, that we are building the right people. So that's also weak corporate governance, where sometimes a Lala company in India, they say, I want to make all the decisions. You are my employee. How can you make a decision? Yeah. But that's the mistake. If that's your style and you say, I don't want you to make a decision in my company, you failed right at the start. So that's point on governance. Social. India has a tremendous young population, in large part that's working, in large part that needs jobs. And so providing jobs itself is a great social good that sometimes companies do. Moreover, companies in certain communities, manufacturing communities, help the community, even the families that are there and that are not themselves working in the company as well. And simple things like women on the shop floor. So we have auto components companies, like I'll give you the name, Motherson Sumi. Motherson Sumi plants in certain cases have had more women on the shop floor. Say they do wiring harnesses. Wiring harnesses, you need both your hands, and women are more ambidextrous than men.
Okay.
But less women were working, and asking them why, they said it's not clean, we need lighting, we need clean toilets, we need safety. So Motherson went and said, you know what, we're going to do all of this because we want you guys to work so much so that the founder, Mr. Sehgal, calls all his effectively employees as his daughters, right? So that's what
And
he
one of
says.
the biggest companies in the country now.
One of the biggest companies in the countries. And so the social piece is something that's hugely important to companies as well, is how team members and kind of employees are treated.
So, sorry, but on the social front, right? Some of the corporates we talk to, they're now looking at hiring physically disabled, etc. kind. Is that sort of falling under the S of ESG?
Yes.
It's to diversify their.
So when I went to my father and I said, Dad, there's a charity, there's a non-NGO, and we should support an NGO. He said, Akshay, I have 3,000 employees. I support the families of 3,000 employees. Now, am I not doing a social good already by doing this, right? So I think there are levels of this, right? You can take an extreme view and say, hey, I'm not going to drink from a plastic bottle ever again, because that plastic bottle goes through a process, and so we will use a glass. So at every stage, right? And if you guys are married, or you'll find that there's somebody always has somebody maybe a higher expectation of you. And so I would say that is part of it, where it's great to be able to do that. And I'm a donor to the Spastic Society of India. I was paralyzed as a kid, so I'm very close in terms of my own charity to something like that. But if I was looking at a company, I won't say that, hey, I have to invest in only these companies that employ a certain percentage like that. No, it's a good to have. It's not a must have.
And the E?
The E is the area where I would say for us, we've tightened the screws the most over a period of time.
We as in Malabar?
We as in Malabar, and a lot of Indian companies and government officials have a view that if China, America in the Industrial Revolution polluted the world for so many years and grew and generated wealth and generated assets and the like, and then China did it for so many years, right? Why should we not be able to do it, right? So that's one view that's out there. I think we're happy to report that the environmental agencies in India have really kind of woken up, and sometimes you don't have a choice. If you go on the ceiling today and you travel on the ceiling, you can barely see the ocean. In Bombay, it's this time of the year, but it's also the level of pollution that exists. So I think for us, we've, while managing the environmental standards to the Indian standards is important, what we've done is realize that certain companies need to manage to international standards. So we've picked up our own questioning to an international level because it's important for companies to be able to comply globally with global needs. And I think our environmental laws are also getting there. And one example, at a point in time is Beijing and China, right? They have blue skies today. Today.
But 2008 Olympic, yeah.
Right? And so there were years where it was bad, and today they have blue skies. So there are examples of cities that are heavily polluted cities that have gone the other way. And I think it's the small pieces of work that you do. Taking a step back, global investors are used to ESG rankings on companies because companies disclose a lot of metrics and they come up with a rank. Indian companies, it's not there as yet. It's maybe there for the few larger companies in the country, but yet it's a lot of disclosure that one needs to do. One good thing about our regulator, SEBI, is they force all public companies to disclose on the CSR, on the ESG front, what they're doing. So if you open up annual reports today, you'll be surprised that many companies will have solar, wind, CSR initiatives, etc. in the annual report, which then you'll be able to tell as to how focused a company is on ESG or not.
You invested in one of the most fastest growing consumer companies, which is both. You also invested in a bunch of other companies. I think you're heavy on Rummy, if I'm not wrong.
Yep.
Can you just tell us how are you looking at those companies and you're investing in these things?
Sure.
Macro level.
Yeah. So at a high level, for us, we are old school value investors. So cash flow is very important. So if a business is generating cash, we get interested. If the moat that a business has, right? So in the case of boat, it has a brand, it has an online presence, it has a distribution, it has a level of backward integration into chips to be able to provide noise cancelling, etc. at a certain price to the Indian consumer. Or in the case of my rummy circle, the largest rummy player in the country, being able to provide liquidity to the largest players at 2 o'clock in the morning, they automatically come to the largest platform. So that's in itself a moat. So the moat that a business has, appreciating the moat, how defensible it is, how long it can last, and how it can translate into earnings growth is a big part of our work. And we try and touch the value chain, the company, the second level of employees, suppliers, distributors, plant visits, board members, ex-employees. So kind of the full 360-degree analysis to appreciate that does the moat exist? Or sometimes the CEOs and promoters of these companies are phenomenal sales agents and they'll just tell you what you want to hear, right? So that's one part of it. The second piece is the people, the management, their operational capabilities, the scalability of their operations, their capital allocation decisions, their corporate governance internally, their passion and their cognitive function. Cognitive function is how open is the management to discuss the risks that we see in a thesis. So we have some 270 questions across these 6 buckets that we ask to rank the management. Why? Because with years of experience, our A+ management have outperformed on earnings, which is how we judge ourselves. And then the last part is the valuations, which, I guess for the audience, we can leave it aside, but just you can have a phenomenal company, but it may not be a great investment because you're paying too much per share relative to where the earnings are. So it's this equation and it's an and function of the moat and the defensibility of the thesis and the profitability, cash flows, the quality of the management, as well as the valuations and the kind of price you're paying. So this equation effectively helps us make investments.
The last point is what value investing technically is, right? Knowing the right price at the right valuation to invest in.
So value investing, there are 2 schools of thought in value investing. There is the balance sheet Graham style investing, where you can get a lot of assets on a company that is cheap, right? And then there is the Buffett value investing, which is cash flows and growth, and trying to figure out where that growth is relative to the current, value. So those are the 2 schools of thought. In India, the Buffett style works because there's a tremendous amount of growth and you have a lot of value traps in India where you have companies with big assets, but their share price doesn't move for many, many years versus the Buffett. So to some degree, the margin of safety is, in old school thinking or value investing thinking, you could say is, what is the intrinsic value and what price am I paying at a discount to that? So that is a discount to intrinsic value is margin of safety. What part of the margin of safety is the earnings growth as well. Because to come to an intrinsic value, if your earnings growth, and many of our companies grow at 25-30% annually for many years. So what happens is an international investor may say, how can you call investing into a 30 PE stock, value investing? And we'll say, but it's growing at 30% earnings CAGR for many, many years. It's done more than that in the past. So we believe that it should be worth more than this 30 PE. So that is one of the biggest challenges we deal with in terms of global investors, because they say it's just too expensive. Your Indian market is too expensive. And this is what we tell them is just look at the earnings growth before you, take a call on the valuation.
Man, this was so much fun. I still don't think I still left 50% of what I want to ask you. I'm sure if you could give us a little bit more time, we'll do part 2 for sure. Sure. But thank you so much for doing this finally. Pleasure. And I really enjoyed it.
Thank you so much for all your time.
So thank you. And I would say the last thing I would say is in terms of finance and accounts and what you guys are doing, I just want to say thank you for the broader community because having a grounded education and physical location sometimes is challenging in India. Yeah. And so to be able to have an internet connection and to be able to learn through an internet connection is already a value added service that you guys are providing. And finance and accounting is something which is very basic to the world of working over a period of time. And it's a great, place to start. And I hope that, many, many students benefit from what you guys do at Zell. So thank you.
Thank you. Thank you so much, man. I think we're